Stocks trade soft but ranged ahead of the US FOMC meet decision and the Indian interim budget. Oil and gas as well as PSU banks lead gains, while the consumer durables as well as utilities tracked today.
Bajaj Finance slides on posting a jump in provisions towards loans as concerns mount over its asset quality and ability to grow at a rapid pace. Separately, Managing Director Rajiv Jain clears the air, saying he remains firmly in the saddle.
Cantor Fitzgerald's Brett Noblow tells CNBC-TV18 that India's big infra push will benefit Adani Group. He adds Adani Enterprises, being much in the news, drew him to study his first Indian company, which he argues is undervalued on a sum of the parts basis.
Hearing in the emergency arbitration in Singapore in the Zee-Sony dispute kicks off tomorrow. Meanwhile, the NCLT has agreed to hear a shareholders' plea on the Zee-Sony merger, which Zee states should not be seen as their proxy, and they'll wait for the arbitration hearings.
Orchid Pharma gets an approval from the European Medicines Agency for a novel antibiotic drug component, making it the first drug invention in India to get such clinical approval. The stock leaps. Hello and welcome. You tuned into Business Lunch. I'm Nisha Poddar. With me, as always, is my co-anchor Pavitra Parekh. Pavitra, good afternoon. Softish on Nifty 50 at the moment, but there are various stock-specific movements to really look out for. So Nifty 50 at this point in lunch hour 21,700. On Nifty 50, and it's 0.18 down in trade. Sensex has lost 250 points at the moment, but Bank Nifty is still in the green zone, but totally flat at the moment. Mid-caps are the ones which are a spot of resilience in the market, with almost 0.5% gain at this point. And that's also really adding to the market strength because of the broader markets really participating much better than the frontline indices today. So that's the main theme of the market. Advance decline ratio in favor of the advances. On my screen right now, BPCL, Hindalco, Tata Motors, ONGC, HUL are some of the top gainers in terms of percentage for Nifty 50.
So, like you mentioned, on the large caps, it looks a little bit quiet today, but we had that huge run yesterday as well. So today, I guess it's to be expected, a little bit of pullback in names like Reliance, HDFC Bank, and then ITC also after its muted earnings. So those three weights are definitely, having their bearing on the Nifty index, but a lot of action in the broader markets as well, like Nisha was pointing out. So if you see, stocks like Orchid, Azad Engineering, these are seeing huge moves right now. Zee Entertainment also, we'll talk more about all of these individual names, but it's between 5 to 20% kind of moves that I'm talking about. On the downside, there are some big contributors. So like I mentioned, Reliance, ITC, HDFC Bank, but you also have the Bajaj twins, which are a little bit under pressure. And then a lot of, these names which have had a very sharp run this year. So a lot of the railway stocks, those ones correcting a little bit. So IRCON, IRFC, there are a lot of pockets like this, which we will get to in just a bit. But that is the shape of the market right now. Let's kickstart the show with the big story this afternoon, which is that Sony has initiated proceedings in the Singapore Arbitration Court against Zee Entertainment. Nisha, tell us more about this. There's, new development every single day coming through, but where are things now?
So an ugly legal battle has really begun, and that is going to continue for a while and will be the theme of Zee Entertainment, and the stock will be impacted because of that. So this really begins between Zee and Sony, with Singapore International Arbitration Centre hearing the matter on 31st of January, that is tomorrow. Now, this is on the breach of terms of the agreement alleged by Sony while terminating the merger, and it also slapped, remember, a charge of $90 million against Zee. Now, Zee has countered the claims made by Sony, and now, in the absence of, remember, any formal negotiation on the matter of Puneet Goenka's position being the main cause of breakdown of the relation between the two, which we remember earlier explained was done informally, the main legal bone of contention for this legal tug of war are the conditions precedents. So Sony claimed that financial thresholds not met by Zee on time. Zee's claim is that their part of the CP are complete. Now, sources say that certain condition precedent or CPs were operational in nature and have been completed by Zee. Some pertaining to the international businesses closures have been closed by Zee, which, remember, also includes businesses in markets like Thailand, Russia, as well as Germany, have been closed. And CP that are really pending are some of the joint CPs between Sony and Zee, and they were scheduled to close between two of them. Now, like the unfinished ones include submission to MIB, which was Sony's responsibility. Now, in another matter, which is very important, is that NCLT has agreed to hear the Zee shareholders' plea on implementation of the merger. Here, the legality of the termination will be heard by the court. And also remember that NCLT Mumbai had earlier approved the Zee merger, and also note that Zee has separately approached NCLT to order the merger implementation and refutes Sony's claims that this shareholder is a proxy for Zee. So that's the entire legal matter, Pavitra, and a lot of action will go on in times to come.
Oh, absolutely. And, with the hearings also starting tomorrow, I'm sure this is going to remain in the news. But thanks for filling us in with all of the details as things stand right now. Zee, by the way, is up almost 6% on that news. Moving on to another stock which is doing well today, that's Petronet LNG. This after their Q3 earnings. It was a good set of numbers. So Sonal is here with all of the key highlights from the earnings. Sonal.
It was a beat on all parameters versus the poll as well. To take you through the numbers first, they were reported after market hours yesterday. It was a revenue growth of 17.5% on a sequential basis. The EBITDA was up 40%. Margins came in at 11.6%, which compares with a poll of 9.7%. Net profit also up 46% on a sequential basis. Now, this was also led by a pay-or-use charge, which the company booked in the month of December to the tune of around 610 crore rupees. This is for the entire calendar year 2023, something that we've seen in the previous quarters and previous financial years as well. So if we strip off that, even then the numbers look good on a sequential basis. Total volumes, they came in at 232 TBTUs, which is an increase of 39% on a YOY basis and 4% on a sequential basis. In the conference call, there were some questions about the Red Sea issues because the company does import LNG in terms of cargo. So they did say they have long-term contracts with RasGas and Qatar, and the earnings conference call has already actually happened. In terms of the contracted cargoes from Qatar, they are not seeing any impact due to Red Sea issues. There is an impact for the cargoes coming from the US, but there's not so much that Petronet LNG themselves are doing. They are saying they've reached a settlement regarding user pays charges, and that is something which will be beneficial for them. There'll be no impact of that. So if there are any additional volumes from the ones which have already been contracted for, that will be booked as additional revenues by the company and additional income as well, and there will be no revenue loss. So this new agreement that the company has entered into with their off-takers is something which is positive, and the stock, after good numbers, is higher in trade.
That's right. It's up 3%. Thanks, Sonal, for all the details. With that, we'll slip into a short breather on Business Lunch. But remember, ahead of the interim budget 2024, we'll get you the details on the big numbers that are expected this time around. Don't go anywhere.
Hey guys, welcome back. You're still tuned into Business Lunch, and we are just days away from the interim budget. So what are the big numbers that can be expected this time around? Lata is here to wrap all of that up for us. Lata.
The key number to watch is always the fiscal deficit. Now, market is torn between a base case, those who see the fiscal deficit coming down to 5.3, and the optimists who expect 5.5% fiscal deficit. Now, the base case, guys, their case is that deficit will be cut from 5.9 to 5.3 because the government has committed to bring down the fiscal deficit to 4.5% by FY26, which means 70 basis points lower deficit, FY25 and FY26. Also, they argue high deficits when growth is already high is not good for inflation. And then good tax collections, where growth is good. All this makes it a good time to cut the deficit. Now, what are the optimists with 5.5% fiscal deficit saying? They say it's a pre-election budget. We will have to see some populist promises. No harm running up a higher deficit in a year when, remember, $25 billion of foreign portfolio money, FPI money, is going to flow into government securities because Indian bonds are included in the JPM bond index. So that's the argument for the 5.5, guys. Now, the next big number that everyone will watch out for will be the CapEx number. CapEx grew by 35% in the FY24, the current year's budget, which was presented last February. What's the base case? Base case expectation this time is CapEx will grow only modestly by 10%. And it will still be 3.2% of GDP like it was in FY24. Now, optimists like Citibank are saying that CapEx is likely to grow by 20%. At least that will be the budget announcement, to 12 trillion rupees, 12 lakh crore rupees. This obviously important for the stock market. It's good for construction and railway stocks. Other key numbers to watch. 1, nominal GDP growth. Now, after a weak 8.9% nominal GDP growth in the current year, an 11% assumption is possible, but actually it's between 10 and 11. 7% real GDP growth and about 3 to 4% inflation is the base case. But some say the government may be conservative and assume the 10.5%, the lower level. A second number to watch will be the overall tax growth assumptions, or what economists call tax buoyancy. Now, tax growth surpassed all expectations this year, mostly because of income tax growing by over 30% in the first 8-9 months for which we have data. In FY25, our economist poll shows that average expectation of tax growth is likely to be modest at about 12% because corporate sector margins are likely to normalize, so that they will pay less in terms of tax. Now, tax tinkering will be promises at best, say most of the brokerages. Subsidies and revenue expenditure are expected to be slightly higher, but they will grow less than the nominal GDP, that is less than 10%, because of, pre-poll moves like raising the transfers under the Pradhan Mantri Kisan Samman Nidhi. It may be raised to 8,000 rupees per family per year. Now, if this happens, it's very good for rurally exposed stocks. More LPG subsidies also expected. That will also push up the bill a bit. Finally, the big number for bonds and banking stocks, government's market borrowing. Net borrowing is seen around rupees 12 lakh crore, 12 trillion rupees. If this comes true, then bond markets are going to soar, as will, of course, even banking stocks. Even a slightly higher figure won't hurt. FPI's hai na, index inclusion hoga. The market is going to be happy about it. Market is torn, therefore, between a balanced budget and go out and spend budget.
All right. Thanks, Lata, for all the details. Looks like in budget exuberance, Lata is getting multilingual and talking the language of the market. On that note, we'll slip into a short breather on Business Lunch. All eyes now are on the US Fed Reserve's decision due tomorrow. We'll get you more details on what to expect from US FOMC right after this break. Finance
Finance Minister Nirmala Sitharaman is all set to create history as she presents her 6th consecutive union budget. What will the budget mean for you and for me? Stay tuned to CNBC-TV18 on our YouTube channel as we analyze the budget in real time and bring you the best analysis. Stay tuned to CNBC-TV18, your budget headquarters on YouTube.
Welcome back. You're watching Business Lunch, and at lunch our market has completely lost its steam. In fact, dragged down further in the last 15 minutes of trade. So now almost 0.3% down, losing 61 points on Nifty 50, and sensex is down about 255 points. Bank Nifty, that is the one now losing more steam and has gone in the red zone from being flat, and mid-cap universe, which was more resilient with 0.45% gain, has also lost a little bit of ground. So there is overall a slight bit of weakness which has really come in. Some of the laggards and losers, remember that Reliance, HDFC Bank, which were big gainers have lost ground today. ITC is amongst one of the key draggers, which has lost more ground in the last few minutes of trade. All right, moving on to some global developments which are going to impact the Indian markets as well. Investors and global markets will closely track the Federal Reserve's decision tomorrow. Now, the US Fed is largely expected to maintain the key interest rates at current levels tomorrow. However, the timing of when the Fed could really start cutting rates will be closely watched out for. That is, remember, one of the positive triggers that the markets across the globe are waiting and watching out for. So CNBC's Steve Leisman sets the stage for tomorrow's Fed decision. Steve, tell us what's expected.
One way to think about the Fed is this. They've done their final maneuvers on the balance beam. It's now in midair to execute the landing, and no one quite knows if they're going to stick it. Judged by the inflation numbers so far, the past few months anyway, the routine has gone pretty well. All three major gauges, PCE, headline, core, and even core services ex-housing, are at or below 2%. The 6-month annualized core rate has been below the Fed's 2% target for 2 months running now. And all of that has come, surprisingly, with growth above potential and the unemployment rate barely budging. So why not cut rates right now? Well, staying the Fed's hand, judged by what they've been saying, from that immediate cut is concerned about the sustainability of the decline in inflation. Growth and employment still remaining strong, with particular concern about wage growth and risk from, of course, the Middle East conflict, which could lead to a new inflation surge. Hasn't so far. The Fed, most of all, doesn't think it'll help the credibility or the economy by cutting rates and having to reverse course and hike again. So it wants to be very sure. Markets have now given the Fed some flexibility. There's just a 2% chance of a rate cut at this meeting, 49% for March. That is down from a near certainty of around 80% at the last meeting. You can see that certainly rises to all the way to 99% by June for that cut. Now, the Fed's path to its landing is full of uncertainty. Strong growth could give it time to execute the soft landing, but rate cuts need to work into the economy, and you still have those past effects of rate hikes still dragging on growth. And you can do a great routine, as you know, but if you blow the landing, Ty, you could end up off the podium.
All right, Steve, thanks a lot for setting us up for that big Q that we're all tracking tomorrow. But another big development I want to bring you, and this is also from the US, is the drone attack in Jordan by Iran-based militants that killed 3 US troops and also wounded a dozen others. Following the unprecedented attack, US President Joe Biden promised to retaliate against the militants. The US Defense Secretary Lloyd Austin also vowed that the US would take all necessary action to defend their troops. CNBC's Dan Murphy has a roundup of all that has really taken place so far.
Washington accuses Iran-backed militants for the attack and is now weighing how to respond. The threat of US retaliation against Iran is, of course, upping the ante of a wider regional conflict. And it comes as Qatar, Egypt, Israel and the US are trying to work out a deal to free hostages held by Hamas. Qatar's Prime Minister saying he hopes a US response will not undercut those negotiations.
I hope that nothing would undermine the efforts that we are doing or jeopardize the process, yet it will definitely have an impact on it, and will, one way or another, it will have an impact on the regional security, and we hope that things get contained and not to get escalated beyond control.
Al-Thani also commented on the Israeli security dossier obtained by NBC News, which alleges that staff from the UN's Agency for Palestinian Refugees were part of the October 7 attack. The allegations have led the US and at least 10 other countries to further suspend funding to the UN Relief Works Agency.
If there are claims against some of the staff, there are, as I recall, around 12 staff who've been involved in this. These claims need to be investigated. UNRWA needs to take their measures according to their charter, but it cannot be punished because of the act of some employees as long as they are complying with their...
including
their
kidnapping a woman, according to the allegation?
Well, no, actually, none of the... first of all, we don't know about the allegation yet until the investigation come out yet.
NBC sources say a draft of the ceasefire deal agreed by negotiators will be presented to Hamas later today. It could perhaps include a 60-day pause in hostilities and an exchange of hostages for detained Palestinians. Prime Minister Benjamin Netanyahu's office has maintained there has been no agreement on any deal. US Secretary of State Antony Blinken voiced his hope on the proposal as well.
I believe the proposal is a strong one and a compelling one that, again, offers some hope that we can get back to this process. But Hamas will have to make its own decision.
All right, on that note, completely out of time on this edition of Business Lunch, and taking your leave, Mid-Cap Radar comes up next. Thanks so much.